Welcome to Markets Now. I'm Michelle Rook along with Chip Nellinger, Blue Reef Agri-Marketing, and we had a higher day in livestock futures while mixed day in the grains. And Chip, I want us to talk about corn first off. We kind of failed today despite the fact that, the Argentina weather situation still has some concerns, and we had pretty decent exports this morning. So what happened? Did we just run up into chart resistance or what?
Yeah, I think a couple things. We've tried several attempts up here in the mid to upper 680s. You got the 200-day moving average up there, and we just can't seem to get the funds enough firepower to push us up above that level. I think if you could see a close above 690, you're going to see an acceleration of the move higher. But with today's close, I'm fearful that we're running out of gas and need a little bit of a correction. I didn't like the way we closed. The bull spreads have not worked for 2 days. There's been some correction in those spreads. You've seen a tremendous amount of money come in off the sidelines on the long side of corn since the turn of the new year, the 1st of January. And, that's not a never ending supply of money. So the funds may be, towards the back end of placing the money they want. And now, to your point, we've factored in a lot of bullish news out of Argentina. Has stabilized a little bit. They've got some rain. Their corn crop actually looks okay. They planted that a little bit later, and they're getting some rain on it. So some of the corn looks pretty good in Argentina, and we're about to start in, full blast onto the Brazil harvest. So there's some headwinds here, and I'm fearful that if we can't get pushed above 690, we've got a correction coming in corn in short order.
Yeah. Soybeans did end higher today with help from the meal market, which again scored new contract highs. But, how long will we keep doing that? When do we get all of the Argentina concerns in the meal market priced in?
Yeah, I think it might kind of coincide with the pace of the Brazilian bean harvest. They're pretty slow right now. They're under 10% completed. But as you look at that extended forecast for the northern 2/3 of Brazil, it is fairly dry. And so I think the pace of their harvest is going to pick up steam. Even though we made new highs in meal today, that is definitely the main thing that's kind of been helping corn. It's also been the main driver of the rally in beans. We're running out of momentum. So there's a lot of divergence on whether you look at an RSI or a MACD type technical indicator. There's a lot of divergence here, meaning that the product, the futures made new highs, but the indicators didn't. We're running out of some momentum. If we can't accelerate this move, again, I think we're subject to a little bit of a correction in lower. And meal, I think, is one thing we have to watch very closely. If it runs out of steam, I think it takes the bean market and the corn market with it.
Yeah. And to your point, Brazil's harvest is starting to pick up. And so we might get some South American harvest pressure here at some point in the near future. The wheat market, kind of a mixed trade there. We did have, not the best exports this morning. The dollar was higher, and looks like as far as Kansas City wheat, that $9 mark is kind of our resistance area there, isn't it?
Yeah, it has been. The funds, on the Chicago side, they play mostly in the Chicago market just because there's more volume there. Sure. A pretty healthy short position built up north of 70,000 contracts. And I think, the market stopped going down on bearish news with the January crop report. I think now that we're into a new month, you're seeing a little bit of short covering and some profit taking by some of these funds. My fear, though, is that it's temporary. If we can close the week strongly, if we can have a nice day tomorrow, close strongly for the week, maybe that can spur some additional short covering by the funds. But it just seems like wheat is back to its old ways here, and every rally gets sold.
Yeah, and the funds, boy, they're still, especially in Chicago, they are so short in that market. So they could really rally this thing, or if we got some sort of a catalyst to get them out of those shorts. Let's move over to the cattle market. So yesterday was disappointing. We kind of faded the inventory report numbers. Today we're back up. And so, is that market, were we taking a little correction before the next leg up here? Because I think we did score more new contract highs again today, didn't we?
Yeah, it's been a choppy ride in cattle, but I think we took a couple days to kind of digest this inventory report. We rallied strongly into it, and it came out much lower, but within the expectations of the market. So I think we had a little bit of buy the rumor, sell the fact type trade yesterday, and you're back into it, with strong gains today. So at the heart of it, the take home is that inventory report was bullish any way you cut it, and the numbers are shrinking and our weights are dropping, and so that's the makings for a longer term rally in the cattle market here.
And exports were pretty good this morning too.
Yeah, that was good to see as well. I think that helped us out. 25,000 metric tons. China was in there for a little bit of business, and so nice bounce back in the beef exports. Had a little bit of a trend lower there for towards the end of the year and the first couple weeks of the new year, but hopefully we've broken that. It was a really strong performance today.
And today we're back up in the hog market. Of course, it was kind of a wicked fun selling day again yesterday. A lot of us thought this market had bottomed here, especially after the reversals last week. So are we still in the bottoming process here, do you think?
Well, potentially. You're probably better set up now, unfortunately, with the kind of theory that the market, shakes out the most people. That April contract pushed into new lows yesterday, probably shook out some of the weaker longs, rallied today. I still think longer term, the problem here is that you still have a big premium in the April contract to where the lean index is. And that was the main
Sure.
problem with February. We broke February $15 in less than 2 weeks because of that problem. So unless the cutout in the cash market can stabilize and put a big rally in here, I don't know that the April has to rally a tremendous amount. It's oversold. Sure, we could rally $3 to $5, but I don't know if we've got $10 to $12 in the April to the upside unless the cash market can kind of catch fire here.
Right. And so these pops we get are just short covering because the funds are actually short now, like 5,600 contracts, aren't they?
Yeah, the funds have really been, more aggressive in the hog market than I ever remember. Both sides, right? And
Yep.
they don't seem to be in it for 6-month runs. They're in it for 2-3 weeks at a time. They'll get in, they'll get out, they'll take their money and run. And so I think that's a good thing, but it's increased our volatility. To your point, there's probably some upside in here, but the problem is now, the cash market. I'm also fearful of these summer months. You get out there, you get back, closer to the highs that we've seen. And I think we need to really be a little more cautious on the summer months. There's still plenty of time. Don't get me wrong that the sky's falling, but I think this action of the last few weeks really is a wake-up call on the hog side.
Thanks so much, Chip Nellinger, Blue Reef Agri Marketing, and that is Markets Now.